Welcome to the presentation of the Photon Energy Group of our results for the third quarter of 2022. Together with Jens Wollner, our CFO, who's to my left, we'll be going through the presentation. Thank you very much for your attendance today. And we will start with a recap of an explanation of our business model. We'll talk about our strategy and outlook, and Clemens will then walk you through the financial results for the third quarter of this year, which I assume most of you have already seen. So this will be good news. And as usual, we'll just start with a very brief introduction to those who may be new to our company. So we've been in business since 2008. We are a Dutch holding headquartered in Amsterdam. Particularly over the last 12 months, we have been expanding our teams globally at a very rapid pace. So we have now reached the milestone of around 200 employees. We are active in over 10 countries. Our shares are traded on the regulated markets of the Warsaw and the Prague Stock Exchange, as well as the open market of the Frankfurt Stock Exchange. This year we have seen 3 brokerages pick up coverage of our stock. And last but not least, we have in 2021 undergone a sustainability rating with EMUC, which is one of the leading third-party rating agencies in relation to ESG, and received a very good rating. And so this is our issuer rating. But as most of you are aware, we have also placed our green bond in November 2021, which we recently tapped again. And that is, has also received a second-party opinion from EMUC. That's why it's classified as a green bond. We have 2 business lines. One is solar, the other one is water. The key numbers on our solar business line is that we have currently around 900 megawatts of projects under development. We've built over 120 megawatts, of which the vast majority was for our own proprietary portfolio, which currently stands at 91.9. At this point in time, another 28.3 are under construction in Romania. So, they are already in an advanced stage, so we will start commissioning them in the near future, which will take us well over the 100 mark and to around 220. In 2021, we generated 103 gigawatt hours of clean electricity, which is a number that we actually matched in the first 3 quarters of this year. So we've landed at almost exactly 103 gigawatt hours. So for the full year, we expect to exceed 120 gigawatt hours. And in terms of operations and maintenance, we currently servicing 380 megawatts of PV power plants, which includes our 91.9, but also a growing number of external customers. In our water business line, we focus on lake management, which is the treatment of surface water bodies, rivers and lakes mainly. And we work on the life cycle management of water wells with utilities. And then we have our nanoremediation business line with a particular focus on the remediation of groundwater from various types of contaminants. And the one that we are most excited about is our technology's apparent ability to break down PFAS chemicals in groundwater. More on that a little bit later. Our footprint is Central Eastern Europe, which means Czech Republic, Poland, Hungary, Slovakia, and Romania, as well as Australia, where we've been present since 2012, so now since 10 years. As mentioned before, our pipeline stands at around 900 megawatts, spread across Australia, Hungary, Poland, and Romania. There'll be a more detailed breakdown later. Our pipeline of Our portfolio of power plants includes 15 megawatts in the Czech Republic, 10.5 in Slovakia, 51.8 in Hungary, and 14.6 megawatts in Australia, and obviously Romania as a new jurisdiction in which we own and operate power plants in our portfolio will be added shortly. And O&M, there's been some some growth in our O&M segment since the end of the second quarter. And we've grown to 380 megawatts, and from what we can see, we expect a lot more dynamism in this segment over the next months and quarters. As you can also see from the map, there's in certain areas and for certain services, mainly around the inverter maintenance, we actually have a Europe-wide customer base, and also our technology distribution division is winning customers outside the immediate region that we cover with our offices. Strategy and outlook. So the key strategy drivers for our company are and are expected to be, first of all, to increase our electricity generation volumes, which is a function of our installed base. And the fuel for that is a pipeline of projects. So we continue developing the pipeline that we have, and we're constantly looking for new project opportunities in our target markets, while keeping an open eye on opportunities in new markets, whether they be neighboring to our current footprint and in some cases also further afield. Control of our own pipeline of projects is absolutely crucial. And at this point in time, there's way more capital chasing renewable in general and solar projects in particular, and therefore locking in those projects and controlling them is absolutely vital, so that we don't have to go out and compete in the market for ready-to-build projects, which of course in general tend to be sold to the highest bidder. So we come in much earlier. Well, whatever we can, we generate in-house or we co-develop. In some specific cases, we also are open to buy projects that have been fully developed by others and are ready to build, as long as the numbers make sense. We are also increasing our capacity to address the exploding demand for EPC services. So it means for the construction of turnkey PV installations or power plants. So across utility scale, but also in the fast-growing behind the meter segment. It means for the consumption of the generated electricity on site, we are currently increasing our capacity across all our markets. Operational maintenance, I already briefly mentioned before that we have seen some dynamism, and we expect it to continue as our strategy to position ourselves across the CE region as an experienced, transparent, and highly bankable O&M provider starts bearing fruit across all 5 markets in the CE region. So in all these 5 markets, we are on the ground. We have our own technicians, with the exception of Poland at this point in time. Everywhere we have our own assets, and we can see that the perception of the importance of operations and maintenance is growing, and we believe that we'll see some very interesting dynamics over the next couple of quarters in terms of megawatts under management. And as this business is about scale, growing our scale is of vital importance. Then we have technology, which is our technology component procurement arm, but at the same time also a distribution business where we import modules, inverters, and over the last 12 months, again with a very encouraging dynamism, also batteries directly from the manufacturers, the vast majority being based in China, and we distribute those to other EPCs, sometimes developers who want to realize the projects they develop themselves, but to a very large degree to small installation companies. addressing various market segments from households all the way to medium and large scale behind the meter installations. So this segment, as you'll be able to see when we discuss the quarterly financials, has grown very, very dynamically this year. And but we believe that there's still a lot of headroom in the CE region that we mainly target. And as I mentioned before, we are also winning customers that are based outside our immediate footprint. Last but not least, Photon Water, where we see very encouraging developments in relation to the success of our nanoremediation technology in addressing PFAS chemicals. And as it appears, our technology is able to break down PFAS chemicals on the ground. There's been very positive developments in our pilot project in Australia, and we do expect next year to move to the commercialization of that technology, which offers us a global market opportunity. A very important part of our strategy is that we have switched at the end of last year / at the beginning of this year as much as we could of our installed capacity to the merchant model, which means that we are selling electricity in Europe into the day-ahead market, in Australia into the spot market, and basically become a price taker in the energy market. So we have not signed any power purchase agreements. Wherever there is a subsidy element, like in the Czech Republic, which holds the so-called green bonus, which means we're still receiving the investment subsidy element from whenever the support scheme was awarded, which is 2009 and 2010. But we are keeping ownership of the electricity and selling them into the market. In Slovakia, there was no possibility to opt out, so we continue receiving the feed-in tariff. In Hungary, wherever we could, we opted out of the feed-in tariff arrangements in the card meta schemes. There is for both these schemes, there's a possibility to return back to the feed-in tariff after a period of 12 months. We opted out as of April 1st. So after April 1st, 2023, we can return at any point in time. However, given market situations at the moment, we expect to remain in the market for an extended period of time. And actually looking at the pricing curve, and just maybe a few words on this chart. So at the beginning of this year, market prices were at this lower level. As of the end of October, already after a decline compared to the August peaks, which saw energy prices at levels of 500 euros and more, we are still well above the level, for example, of the Hungarian feed-in tariff, which is at the moment around 85 euros. And as you can see, and here we're taking as a reference the base load price curve for the German market, which is the most liquid in terms of futures trading on the EEX in Leipzig. And for 2032 at the moment, the price level is 116 euros. So the message is clear. The market expects prices to stabilize at significantly lower levels than where they are today. However, a return to the levels of 50, 60 euros that we saw 18 months ago is not foreseen. And in the light of the current regulatory interventions in Europe, and particularly the European Union's decision to cap prices for all renewables at the level of 180 euros, it is important to bear in mind that our levelized cost of energy of the power plants that we are currently in the process of building and developing. And on the next slide, I will explain our technical approach. is, depending on jurisdiction, between 60 and 70 euros. So in Poland would be rather towards 70, whereas in Romania and Hungary, where we have significantly more irradiation, we are around the 60 euro level, even at the recently increased cost of capital. And the levelized cost of energy, and that is very important, already incorporates the project level cost of equity, both for debt and equity. So this is the level of revenues per megawatt hour that we need to achieve to cover all our costs, including our capital costs. Anything above represents already an excess return. And so it's very clear that even at 180 euros, we are well above the level we need. So even if market prices continue coming down a bit and we end up at 150 or even 120, we are still well in the clear in terms of our return requirements. So we've added this slide in order to explain a little bit more in detail what our technical approach is. So essentially, there are two ways how to build utility scale power plants. One is fixed tilt, is a fixed tilt installation, which is in Central Europe still prevalent, whereas in Australia or North America or other advanced markets, nobody today would even consider building a fixed tilt installation for a utility scale power plant. So we are building them on single axis trackers, which in the morning are pointed to the east and in the evening to the west. And wherever possible, we also overbuild these systems, which means that for every megawatt of AC capacity that we can feed into the grid, we install between 1.3 and 1.4 megawatt hours of module capacity. And as a result, so here on the left-hand side in the chart, you can see the difference between a south-facing system that is not a fixed tilt system, that is not overbuilt. You can see this bell-shaped curve on a perfectly sunny day. So this is what such a system would feed into on a summer day into the grid. And you can see that with our technical approach, we start generating electricity earlier and significant amounts of electricity much earlier. When we reach full production, the system, based on the overbuild of 30 to 40%, could produce a little bit more than a megawatt. So this gets so-called clipped by the inverters. So basically, the system does not allow more than 1 megawatt. Here it's for a half megawatt system. So then basically the AC capacity that we are allowed to inject into the grid. So the system does not produce more. But as you can see, we then provide for pretty much a significant part of the day stable supply. So also the impact on the grid is significantly more positive than with the fixed tilt system. And in the evening, again, we then produce longer and more significant volumes than with a fixed tilt system. And the yellow line as an overlay is the actual pricing curve on one of this year's summer days in Hungary. So you can see, but this is something that you see today in pretty much all energy markets. Once significant volumes of renewable energy enter the market, and particularly solar, you see this so-called duck curve. There's a little bit of fantasy. One can see a duck in this. So you have basically higher prices in the morning and the evening, whereas around lunchtime and in the early afternoon, when traditional PV systems inject a lot of electricity into the grid, prices are relatively the lowest. And this is why with our system, we do not only produce and inject higher volumes of electricity, but also we achieve a significantly or a materially higher revenue per megawatt hour, as our production profile is more valuable. And this combination of factors, so a higher average revenue and higher volume, leads to significantly higher revenues per installed capacity, megawatt of installed capacity, and also increase. Well, as a result, the higher volume also reduces our levelized cost of energy, and this gives us the higher confidence level to be a price taker in the market. So means to go for the merchant model. Strategically, we're not excluding signing power purchase agreements going forward, but if so, we want to do it with already operating power plants out of a position of strength. So what we're trying to avoid is the need to go and sign very long-term agreements with off-takers at fixed prices in order to secure project financing. As a result of a long string of discussions with banks that we work with, we've reached a point where we have a few banks that are willing to finance merchant projects on attractive terms. So this is the way to go, and this is how we intend to expand our pipeline in going forward. So a few words and updates on our pipeline. So in Romania, compared to the last quarter, or maybe those of you who also look at our monthly reports, another one of which was published earlier this morning, you can see that in Romania we have now moved with our pipeline quite clearly into the direction of construction. So at the moment 28.3, there's another 3.2 that will follow shortly, but also a significant part of the total pipeline has moved into advanced development. So it's fair to say that a significant part of that will be ready for construction in 2023. In Poland, where our approach has been to develop from scratch, and therefore we have a relatively long development time. We're a little bit behind the developments in Romania, but as you can see, around 30 megawatts have moved on, and also there we expect some of those to be ready to build and to be built in 2023. In Hungary, we have now 3 power plants that are also approaching the realization phase, which may still start this year or will start early next year, depending on weather conditions. And then there's another 22 that will also get ready next year. And the 65 that you see in feasibility are projects slated for the capacity auctions. So we're not going to participate in any support scheme auctions. However, in Hungary, the system has changed where now there'll be an auction for grid capacity, already incorporating the need to add storage. So 30% of the capacity of the power plant needs to be matched by storage, and that's something we are currently working on, both in terms of technical but also financial aspects. But we have identified locations where we intend to develop projects under these new conditions. And this leaves us with Australia, where we have a 300 megawatt project under development based on the technology of RayGen. So this is not a classic PV project, of which we have been involved in the development of over a gigawatt in the past. But we have decided already over a year ago to only develop ourselves projects that we utilize the RayGen technology. And what RayGen has managed to do is to enhance traditional concentrated solar technologies in a way where the reflected and then concentrated sunlight from the mirror field in the receiver is not only harvested for its heat, but RayGen has developed a PV cell that can be placed in this focal point that withstands the high temperatures of around 700 degrees, and through the photovoltaic effect instantly generates electricity, while the heat still gets captured. So this concentrated sunlight in essence gets used twice. The heat gets captured and then stored in a hot water pool or a hyper-insulated hot water reservoir is maybe a better description. Whereas the electricity generated through the PV cells is fully or partly used to chill water in a second hyper-insulated reservoir. So the temperatures are around 95 degrees, so just below the boiling point in the hot reservoir, and around 5 degrees Celsius, so just above the freezing point in the cold reservoir. And then on demand, when electricity is needed through an organic Rankine cycle engine, which is essentially a low pressure gas turbine, commonly used in geothermal power plants, electricity is generated and supplied to the off-taker, which can be the grid, but the system also has the potential to be operated as an island, for example, to supply a remote mine or community that is not connected to the national grid. And what is very important here is that the storage medium is water. So today we see a growing concern among investors, but also lenders about the life cycle impact of batteries in terms of how the input materials are mined. Of course, there are also geopolitical considerations and the environmental impact of the mining. There's still not fully completed question how the recycling will work, and therefore we believe that this approach to storage has a lot of potential and is finding a high level of acceptance. And so we have identified a location in South Australia, in Yonari, where we are developing on currently 1,200 hectares. The footprint may even be increased. A 300 megawatt power plant with a planned energy storage capacity of 3.6 gigawatt hours. So, which would, at this point in time, make it the largest energy storage project in the world besides pumped hydro. Probably by the time we will build Yonari, there will be something bigger, but it is a really significant project that is expected to have a very beneficial impact on the energy grid in South Australia. We've also received what is called Crown sponsorship, which means that the regional government is very keen to see this project move ahead. We are currently still in the development phase and expect to have the project fully permitted, so from a technical point, ready to build by the end of 2023. And at the beginning of next year, we will start working on the financing of this project, reaching out to potential equity and debt partners. RayGen itself is currently in the process of completing and commissioning its first full-scale pilot project, which has 4 megawatts of generation capacity and 50 megawatt hours of storage. The generation side is already operational and already supplying electricity to the grid. And the second part, the storage part, is expected to be finished, and then the whole plant commissioned in the first quarter of next year, which of course is a very important milestone, and which will also help us in getting to financial close our Yonari project. And so I hope I haven't skipped. No. So in terms of financial guidance, I will start with our 2024 targets, which we communicated in mid-2021. So the goal by year-end 2024 is to have our proprietary portfolio grow to 600 megawatts, which is a significant stretch. However, it is matched by our pipeline, and of course it requires a significant acceleration over the next 2 years, and I think it makes sense to point out that this will be more of a hockey stick than a than a linear line leading to those 600 megawatts. At that point in time, year-end 2024, we also want to have a project pipeline of 1.5 gigawatts, which we would assume will also have a significant share consisting of RayGen projects. What I forgot to add is that in Australia, we are currently looking for additional locations for RayGen power plants, but we're also starting to look at locations in other jurisdictions that have the required irradiation conditions. For our O&M business, our goal is to reach 1 gigawatt, which will include our own portfolio and external, and that we believe is a number that we can achieve comfortably. We also have published our EBITDA, target EBITDA for 2024 in relation, which we back then put in relation to our 2020 results. So it was we're envisaging a 5-time increase of the 8.4 million that we achieved in 2020. In 2021, we grew to 9.6, and here I switch over to our current year guidance, which at the beginning of the year we gave at the level of 65 million for consolidated revenues and 18 million for EBITDA. And after the publication of the half-year results, we increased that to 85 million and 24 million respectively. And so with a quick comment to what Clemens will be presenting. So we are almost there in terms of the 24 million. So we have reached 22.8. If I look at the 12 months rolling, so including also the fourth quarter of last year, we are almost at 24 million euros. And so we've made a significant move in that direction. And of course, well, here it's important to say that our guidance for 2023, we will most likely publish with the publication of our full year audited full year results for 2022. But of course, we will strive to continue closing that gap between where we started in 2020 and the target for 42. Having already closed a significant part of this year. I think what is also important is the equity ratio. So we have pledged, and actually in our green bond conditions, it's even a covenant that we maintain an equity ratio above 25%. At the moment, we are around the 30% level, and so all this development and growth is happening and must happen under these financial ratios. And so this is where I hand over to Clemens to present the good news.
Thank you, George. Once again, also from my side, good morning, and thank you for your interest and participation here. I'm in the very happy position today to present you our Q3 2022 financials and the year-to-date numbers, which are the best numbers in the company's history. So it makes me very happy and proud to be here today. Before I go into the numbers, just let me give you a short wrap up what happened in the last quarter and in the short period afterwards. We announced we started the construction of 7 power plants in Romania with a combined capacity of 28.3 megawatts already. You can see here on the right side a few pictures where we show you the progress of those projects. So they are commencing quite well. In some of them already, the modules are fully installed, inverters are installed or on the way, and we will still commission and connect and commission the first of those power plants this year. Not all of them as we originally intended, but they will start going online, and then early next year the rest will go online as well. In line with our financing activities, KFM has evaluated our green bond continuing as attractive, even there is an increasing interest environment. Still our 6.5% green bond was evaluated as attractive with 4 out of 5 stars. We have prepared the bond tap up, which was also taken very well, where we could place another 12.5 million and increase it to 77.5 million in October and now in November together. We have worked on the financing side also in the Czech Republic and refinanced our Czech portfolio with UniCredit Bank long term again and increased the liquidity status of the company significant for future build out. We also, in parallel to that, repaid our old bond, the 7.75% corporate bond that was running since 2017 and which was due now on the 27th of October and was fully repaid. This is the second bond we have in our company history repaid now fully. So adding another big milestone to our financial market presence. And what you will also see then afterwards in the financials, and we will talk a little about it, I think also more from the Q&A side, about windfall taxes. We are exposed, and we have mentioned this already last time, to windfall tax in Hungary with a few of our power plants, only very limited. So 9.8 megawatt of the 51.8 megawatt are exposed to this excess tax. We have to pay 65% on the excess between the feed-in tariff that we used to have and the newly generated revenues or electricity price we get there. And this is also reflected in our numbers. From the KPIs, our power plant portfolio still the connected is at 92 megawatts. So we have this 1.4 megawatt added in Hungary in May. That number has not changed so far, but with the 28.3 under construction, this will be changing very fast and especially for next year, a quite material impact on our electricity generation. Nevertheless, the electricity generation as such has increased from last year, the first 3 quarters to this year, quite significantly to 103 gigawatt hours. George mentioned it before already in this 9 months period. So we have generated already the same quantity as we generated the full year last year. Only in Q3, we had 37 gigawatt hours produced compared to 34.7 a year ago. So also here, a nice growth. But what is more important is what you can see, these little marks on the right side, on the bottom left graph, about how much of these 103 gigawatt hours is merchant. 85.7 gigawatt hours were sold into the market merchant, and only 17.3 gigawatt hours, which is basically our Slovak portfolio, a few power plants in Hungary still, 4 of them, which were sold based on a feed-in tariff. So there we captured these high electricity prices that are out there in the market and therefore could significantly grow our revenues. What I will show you on the next slide, which is our wonderful results for this quarter and the full year. So only in Q3 we could increase our total revenues from 10.2 million last year by 247% to 35.4 million euros. So a significant growth also year to date from 24.6 million last year to 67.8 million, a growth by 175%. So a massive growth in the company. That growth comes from mainly 2 sources already, as we have announced or presented you also in the Q2 results. One is clearly electricity generation. Here, even more at the moment, from 6.6 million last year in Q3 to 15.5 million in Q3 of this year, coming from the additional generated electricity clearly, but also or more of that by the high merchant electricity prices compared to the feed-in tariffs. Year to date, that number is also almost doubling from 16.4 to 31.4 million in revenues. Here, just also as a little how to say, to see that the history, when we had last year for the full year total revenues of about 36 million euros, we had in the first half year this year for the 6 months period similar amount of some 30, a little less than 36 million, and now just in one quarter we have 35 million in revenue. So you can see the significant growth that the company has performed in this time from a revenue point of view. But that is not only the revenue has grown significantly, that goes directly into EBITDA, where we have grown in Q3 our EBITDA from 4.4 to 12.7 million, so massive growth. And year to date from 8.5 million last year in the first 9 months to 22.8 million, as George has mentioned already before. This is just for the 9 months, so our guidance of 24 million. You can see there's not much missing anymore. And if you take the rolling number, we are almost there already. So EBITDA-wise, a significant growth as well. That goes down to EBIT, where we have the effect is even stronger now, with from 400,000 euros in Q3 last year to 9.7 million, and from a overall negative EBIT last year from minus 91,000 to 14.9 million. So significant growth, which also puts us on the net profit. We have announced this in Q2 already, that we turned the company positive. That effect is now continuing and getting even stronger, from minus 1.4 million in Q3 to 6 million in Q3 this year. Year to date, 6.6 million as net profit. So quite sound numbers. And also on the total comprehensive income, where you have then the, how to say, accounting adjustments in terms of potentially other comprehensive income from revaluation of our power plants to foreign currency translation differences, which have been actually negative in these periods now because of the weakening of the Hungarian forint. Nevertheless, the overall result is still 6.3 million for the year to date, which goes directly into our equity. When we look into the balance sheet, therefore, jumping to the equity, our overall balance sheet has slightly grown to 206 million euros. On the Activa side, this is mainly the fixed assets, which is our power plants that we have connected and that are generating electricity for us, with 143 million. Then we have some current assets of 41.4 million. It's work in progress. And also our liquid assets, then as the matching part of around 22 million that we had end of September. That was before the repayment of the Euro bond that was due in October then, but also before the drawdown of the financing for our or refinancing of our Czech portfolio. On the passive side, we have our liabilities. We are stable at 112 million long-term or non-current liabilities, so only slightly increasing. Short-term as well at 36 million, and a growing equity of 58 million from 51.5 million beginning of the year, by 12.5%, coming from the positive development of the company. On a cash flow point of view, here we have now, if you remember from the half-year figures presentation that we had, the cash flow view is turned into how it should be regularly in our business because of the construction start in Romania with those 28 megawatts. So we show a positive operating cash flow that was negative before because of several advance payments that were shown in operating cash flow still, which now go into investment cash flow or are covered by this here. So we have again a significant negative investment cash flow, which is in this case a good thing, from building the power plants, that is increasing our future capacity to generate electricity. And we show a slightly still negative financing cash flow. Clearly, this comes from the repayments that we did in Q3 for our project financing that we had in place. Plus, we already early repaid or bought back a few bonds from the market, which is also then reflected as a negative finance cash flow. That was then again overcompensated, but this we will present the next quarter in October by the additional bond placement and the refinancing of the Czech portfolio. This is roughly the numbers in a nutshell. And then let me just, I think we're finished here and can go to the Q&As.
So thank you, Clemens. So we received a few, and this time very comprehensive questions. So we will try to address them efficiently and as much detail as we can. So the first one is, what lifetime should we assume in LCO calculation? So the answer to that is we're assuming 25 years. The potential lifespan is 30 years, probably more. So it's of course a question how well those power plants are built, how well they are maintained. But we believe with 25 years we are reasonably conservative. Then what efficiency loss is assumed after the lifetime? So I assume that this relates to the modules. So the modules have an envisaged loss in efficiency of 0.4 to 0.5%. So basically after 25 years, and some manufacturers even provide these types of guarantees, the modules should still have about 80% or not less than 80% of the original capacity. Some manufacturers even more for 85. It's a very long time into the future, so we will see. But basically, the efficiency loss should, the accumulated one until year 25, is in that range, 15 to 20%. And the replacement, well, I think we believe that the main value of a power plant, talking about these very long periods, is actually in the fact that we have a location and we have a grid connection. So the long-term strategic value is in the grid capacity, and it may actually become feasible and make sense to upgrade or repower power plants well within those 25 years, simply because there'll be more efficient modules. What is now becoming more and more of a topic is to add storage to already existing power plants. Definitely, that's a topic for new power plants. And so there is a lot of things to consider in relation to potential repowering or upgrade, which probably is not so much a topic for the first 10, 12 years, but I think after that, we'll have to see where the technology will be after the next 10 years to make an assessment. But clearly it's something that there was regulatory issues related to repowering, but I think there's a good chance that it will make sense to somehow amend and upgrade the power plants before year 25. But what form it takes, we don't know. So the next question is a very comprehensive one.
Maybe I can jump into this. I think it's simple to explain about the electricity prices and the change of the electricity prices that we have showed in the presentation in our monthly reports between the different months in the different countries, so that there's a decrease in the Czech Republic from 1,000 to 900 and 700 euros. In Slovakia, it's very stable with 260 euros. In Hungary, it's also decreasing from 460 to 117. In Australia, it's from 100 to 86 to 97. The reasons behind that are relatively simple. I mean, the electricity market the prices have gone.
I will talk about the structure, because
exactly
that number of
is a combination.
Includes also the green bonus, which is about 560 euros at this point in time. So what we show is the total revenues. So it's a sum of the 560 plus whatever we achieve in the market.
Slovakia is a pure feed-in tariff, so there we are not merchant. So this is not an electricity price, but the feed-in tariff we get there is a fixed amount. The difference is just because it's a little different between the power plants and depends on how much each power plant produces. The amount is a little different then, therefore it's basically stable. And in Hungary, it is majority. There's only 4 megawatt of this 58 megawatt we have installed under feed-in tariff. Everything else is purely merchant. So this is pretty much really the development of the electricity price in Hungary that we could realize. Australia is a combination. There we have electricity prices and the green or the large-scale certificates we get. So those both have market prices, and this is here as well. Then can be seen the development of those components, whereas the fluctuating part is the electricity price because the certificates are trading at a relatively stable price over that period. So this is the first to this. The second, I understand the company changed the guarantee tariff to market prices for a variety of power plants. Yes, what are prices for each country at which it will be not beneficial anymore? To start simply, in Hungary, we have the feed-in tariff is the amount of some, at the moment, 85 euros, 90 euros, roughly. It will be adjusted by inflation next year. It's paid in Hungarian forint. So we will see what this number is. We can change back to the feed-in tariff from April onward. So there's a little time until then to make this decision, but it will be around 90, something around 90 euros expected. As long as the electricity prices expected are above this, and there we are very flexible in changing back, so we can do this every month. We were tracking these prices very thoroughly. So as long as we're not going below these 90 euros, we will stay outside the feed-in tariff with those power plants. In the Czech Republic, it's a little bit more complicated because there is this difference between the green bonus scheme and marketing the electricity ourselves that we do today, or the feed-in tariff. There, the price difference is around 100, well, gross, it's 160 euros. But there is also a little difference in the solar levy and a few things to be considered. We are monitoring that very closely as well, and will make a decision very soon, because here we have to make or file this decision until the end of this month for the full year next year. And then next year we can choose again for 2024. So this is an annual decision that needs to be made under which regime we are running there. In Romania, our power plants that we are connecting now are purely meant to be merchant, so there is no feed-in tariff, and there's also no discussion about changing the approach. Same in Australia, there is no feed-in tariff, so those power plants will always generate electricity and sell it on the market, or we might go for some, as George mentioned before, power purchase agreements.
So then the last part of this question is what our plans are for next year to repeat or beat this year's revenues. So first of all, it's also important to note that the prices have been fluctuating all of this year. So it's so of course in October we had these almost 500 euros if you take the Hungarian numbers, but that was not the case for the full year. So in the first quarter, for example, in Hungary, we were still in the feed-in tariff, and there were also months when it was not. So it was not universally high. August was, of course, a month with a lot of production, so that helped. So we believe that average prices next year will be lower, but it doesn't necessarily have to be dramatically lower than what we achieved on average this year. But what will have a significant impact is our larger installed base. So we have our around 30 megawatts that we in Romania that we expect to add. There'll be more following in Romania. There'll be more power plants in Hungary. So as they come online and start contributing, we believe that will more than offset the whatever the decline will be in average prices. So it will depend on a few factors. What we can influence is the speed of our rollout, and that's what we are focusing on at the moment. So we are so the important message here is these were extraordinary circumstances this year that have helped us on a more or less stable, only slowly growing asset base to increase our profitability dramatically. But it's not a one-hit wonder. So with the increase in our asset base, but also the development of other business lines, we expect to be growing from here onwards. But what is important, I think, what has been shown this year is the strong operating leverage in our business. So while our cost base as we grow is growing, a positive impact, and clearly adding new capacity, adding new power plants to generate electricity and sell, where each power plant has an EBITDA margin of 95%. So at the margin, we get a new EBITDA that has a strong tendency to flow down the P&L all the way to the bottom line. And I think that has become very visible this year, and we believe that will become ever more visible as we grow our business. There is the next question is, well, there's a question about our water business line, which we have been talking about for quite a lot, in particular the pilot project for PFAS remediation that we have in Australia with the Department of Defense. The implementation of that pilot has been delayed beyond our initial expectations due to various reasons. One of them COVID, but also some red tape. So Australia is quite bureaucratic in many respects. But what we can say is that in summer we started injecting the material, and we're collecting data. The results are very encouraging, and there was a question whether the impact would be visible in the next couple of months in our finances. So probably I wouldn't go that far, but I think we will be talking about our remediation activities a lot more often. And I think, as I said before, that our expectation is that we will start commercializing, so moving beyond the pilot project stage next year. And the market potential is global. It's significant. It's actually growing as more and more countries are adopting regulation and introducing limits for PFAS chemicals. So this is a real blue ocean that we will, of course, try to tap. And we believe that we have the right technology and also have with this pilot project the right stage where to actually prove the technology's efficiency. Then there's the next question is about delay in our development, or also reflected in the speed at which projects move through the 5 stages that we are publishing to the market. Well, I mean, that's a general issue with, I mean, in our main project pipeline, we now don't publish any more target dates for ready to build, which we did in the past, against which we quite a few times had delays. I'll start with the Australian project. We announced that we should expect to be ready to build end of next year. That's a timeline we still stand by. And of course, always striving to be faster, but there are certain things one cannot influence. But in general, project development is not an exact science. There's a lot of it is an art, and that art is putting together all the components necessary to go through the development process. Certain things are under control, others not. Of course, we are trying to get the projects ready to build as quickly as possible. And through our setup, what is very important is that the moment they are ready to build from a technical point of view, we move on to the implementation. And we actually already, when we see that the project is getting close, we already start the procurement for those components that have longer lead time, so that we move as quickly as possible from a technically ready to build project to an operating power plant. But in the development phase, we have our plans, but you know, as this nice saying goes, if you want to make God laugh, show him your plans. So we're trying, and we're of course trying to move quickly, but and sometimes it works and sometimes it doesn't. So, but I think we are now with the developments in Romania and also the progress we're making now in Hungary. I think it's very clear that 2023, beyond the 30 megawatts that were currently under construction, that we will have will be very busy in adding megawatts to our portfolio next year. Then the next question is how the Polish market is different than other markets where we operate. And well, I think that the time budget I would need to talk about that would go way beyond of how much time we've left. It is definitely a market that is in many respects more complicated. So the highlights are that in all the markets that we have ever developed projects, you secure rights to the land. And the next thing you do, you ask for grid capacity. Not so in Poland. You sign up a long-term lease or a pre-lease, and then you spend time, effort, and money on environmental permits and the zoning decision, which is it takes about 5 months, costs a few thousand zlotys, and only then you can ask for grid capacity, and then you have to wait, you have to pay a deposit, which most other countries we also don't have, and then you wait up to 5 months, and actually most DSOs so far have taken the full 5 months. So basically, before you know that you have grid capacity, you have already done quite a lot of work, committed capital, and you're almost 1 year older. So that's tricky. The other issue that we have in Poland, as opposed to Hungary, Romania, is that at this point in time, with what appears to be a very few exceptions, that the DSOs do not allow overbuild. So we're having constant discussions, and we're pushing that they allow us to overbuild. We understand a few other developers are pushing for that as well, but so far with very limited progress. And that means that the levelized cost of energy is higher than the other markets, not only because of the lower production, but also because we don't have this additional boost through the overbuilding. So I think as Poland wants to further develop its renewable capacity, there's quite a few things that could be improved in Poland itself. But we believe that will happen in the future. And of course, then there are a few other topics as well, but these I think are the most important ones. The next question is, what is the role of Photon Energy in the Australian project? Well, our role is that at this point in time, we are developing the project fully on our own for the RayGen technology, where RayGen would be the supplier of, I would say, the key elements, which is the overall technology, provide engineering services. They provide the software that runs the system and the PV cells. Pretty much all the rest is procured from outside vendors. And of course, there's also the element of construction works is more significant than an average PV plant. So pretty much most of the rest. So in terms of value, less than 10% would come from RayGen, but it's developed on the basis of their technology, their engineering input, and there's a very close cooperation. But the project at this point is ours. So there's a project company that Photon Energy fully owns, that has signed the pre-lease agreements for the land, or actually we have the option to buy the land, so the option to acquire the land, and we are going on behalf of the project company. We are working on the permit. So at the end of this process, there'll be a project company that has right to the land, has the grid capacity, has the development approval, as they call it in Australia, and can develop the project. And there's several options. There's optionality here. One of them is that our plan A would be that we bring in other equity investors, and on the back of that debt financing, and we contribute to that project, the project rights for what we would hope a significant minority stake. But of course, if through that process of finding investors, an investor comes and loves the project so much that he wants to own it fully and offers us a what they call a stupid check, we may consider. Yeah, so our preference would definitely be to stay in the project as a minority investor or as an investor. But as we also develop other locations and want to have a pipeline of region projects, maybe that vision to be an investor may be realized later on. So this is still open. The important thing is, and that relates also to the other the remainder of our pipeline. And our credo is whoever controls the project rights controls everything else. And the important message here is we control the project, we control the situation, we choose who will be co-investing with us and in what form. So well, the average cost of building the plant, of the region plant, well, I think at this point, just to give a ballpark, the expected investment cost, given its current parameters, is somewhere between 450 and 500 million euros. So this is the expected ticket,
including the storage, everything.
That includes the storage, the storage part, grid connection, land, everything. Well, this next question is where we can sum up any state actions that could cap your revenue or tax next profit in 2023. Well, it is of course a very, very dynamic situation. So it's sometimes very hard to keep track. So I'll do it relatively quickly. So in the Czech Republic, there has been a cap on solar generated electricity announced at 180 euros per megawatt hour, valid from December 1st this year all the way to the end of next year. So the EU Commission came out with end of June next year. The Czech Republic went further. However, it's only for power plants above 1 megawatt. So we have 3 installations in our portfolio that are below, so they would not be subject to that. And it's not 100% tax, but it's a 90% tax. So 10% of what is above 180, we would still obtain. There's a windfall profit tax scheme as well, for which, however, we do not qualify because it's for larger companies. In Hungary, at this point in time,
also to be mentioned, this is for electricity, so we still have this discussion about green bonus, which is not kept or taxed, and then this electricity part, or going for the full feed-in tariff, which would also not be kept. So
so there's no impact on the historic support schemes. This is purely about electricity. Then we have Hungary, where so far there's been no windfall profit tax announced directed at renewables. What stands at this point in time for this year, next year, is what has been announced and implemented back in late April of this year, which is a 65% tax on the revenues above the feed-in tariff level. But this only relates to power plants that in the past have either obtained or applied for a support scheme, which is and it only applies to power plants that have a license. That means that have a grid capacity above 500 kilowatts. So as it stands today, and so far there's no additional news in relation to that EU decision. Nothing would change, so it would impact about 20% of our portfolio, but again, only at the level of 65% above the feed-in tariff level, which at the moment is 85%. It would not apply to the rest. Things may be more coming, but this is where we stand today. And in Romania, there is actually a cap for solar power at the level of 93 euros from the 1st of November this year until the 31st of August next year. But it's actually an 80% tax above. So everything above 93 euros, 80% is kept as a tax and 20% is made available to the generators. However, there is also a law that was passed in April this year, which stipulates that this cap or the solidarity tax for the 80% above 93 does not apply to newly installed capacity, whether renewable or not. So on that basis, as things stand today, there is this exception should apply to the power plants we are currently building and planning to connect next year. We'll see. Governments are creative these days. So, but at the moment, that there should be no impact. And which leaves us with Poland, where at this point in time we don't have power plants, and I think this is now very recent. There has been a new law and also a new ordinance from the regulator, which indicates that power plants below and above 1 megawatt would have slightly different caps. One for below 1 megawatt, 375 zlotys, which is 79 euros, and 355 for those above, which is 74.6, which corresponds with the level of the last auctions, I understand. But it's at the moment this is really fresh, so a lot of legal minds have been scratching their heads over the weekend to figure out what's actually happening. So I hope we'll have some more clarity. But as at this point in time, we have not built and operate any power plants in Poland. This has no direct impact. So the news is on the Czech Republic. It is definitely not threatening. In Hungary, at this point in time, we're not aware of any new regulation that would change the status quo as it has been applying this year, at least since May. And in Poland, and in Romania, at this point in time, we expect our power plants or our future power plants are exempted from these measures. Again, this may change, but if it remains like this, then of course this would be very positive. So I think what we can see, the picture we can see emerging is this 180 megawatt limit is not necessarily a hard limit, and certain pockets of exceptions may exist in various countries at various points in time. But again, we're talking about the level 180, well above our LCOE.
Good. The next question was to the green bond, and just very quickly about the number of outstanding, or it says the green bonds for 21. Hold on. Green bond fluctuates almost week to week. What is currently amount of green bond outstanding 21-27, and whether you plan to increase it? If yes, to what? Well, our green bond, yes, has changed. It was originally 50 million last year. Then we increased it in line with the original placement with EBRD to 55 because of the strong demand. And in May this year, we increased it by 10 million to 65 million euros. Now we have done with the exchange offer for the old bond plus a new placement, we added another 10 million. So it is it was 75 million. We already at that time intended to also have EBRD again as a strong investor on board. For technical reasons, this got delayed. Their 2.5 million euro investment. Therefore, we did not announce it at the original placement on 14th of October, but could only report it now almost a month later. This was because we wanted to be careful here and not over-report something which would be then settled later. So this is why there was this changes. So at the moment we have an outstanding amount of 77.5 million. Are we intending to increase that? I think at the moment we could not make such a forward-looking statement. Nevertheless, as a financing strategy, as we have announced in the past several times, financing via bond on the financial markets is one of our core pillars of financing, next to project financing or long-term project refinancing, as we have done with the Czech portfolio recently. What we intend going forward with our Romanian assets, which we are, as soon as they are connected, we want to refinance them as well. And for sure, we also want to go, if it's possible, to financial markets with some fixed income product as well, like this green bond is, as long as it is
Well, I think
attractive.
maybe we have not stated that. I think it's worth highlighting that with the recent actions, which means the repayment of the previous bond and the increase of the green bond, the refinancing of the Czech portfolio. In parallel, what we've also done is we have fixed the unhedged parts of our project level financing. So today, essentially 100% of our financial debt is fixed. So any increase in, and of course the bond, which is the most significant number, is due in 5 years. So at this point in time, it's fair to say that all our financial debt has a fixed and known to us cost. Of course, going forward, should interest rates go up, that will be a topic for future project financings or refinancings. But at this point in time, that was the home exercise for the last 6 months, to make sure that we have no loose ends in relation to the maturity structure, but also the cost of our financial debt. So that exercise has been completed, and I think lets us look forward quite confidently. The bond is a fixed instrument with our coupon of 6.5% at this point in time, probably from our point of view reasonably priced. So I think it's fair to say that it is one of the options that we have on the table to meet our future financing needs. But as Kevin said, the alternatives are project financing and potentially a new instrument. Now thinking out over the next couple of quarters and years. So
nevertheless, keeping the 25%
well, of course,
equity ratio as a boundary, also to mention here in terms of refinancing.
The next question is, could you shed more light on the trend of
the SWOT upstairs? Or did we cover this already?
No. Okay.
To
Sorry, I overlooked.
So
the next one is that we took advantage of the markets, whether the falling prices are a threat, and whether that would allow us to increase in our revenues next year, whether the pace of delivering ready-to-build power plants is higher than that of other companies, and then basically a short SWOT analysis of Photon. So, well, as I think partially we answered that before already. So it's probably at this point in time, it's reasonable to assume that our average prices will be lower. But again, we haven't had those super high energy prices throughout the whole year. But probably at this point in time, we have to assume it's going to be lower. But that will, as we believe, more than compensated by the new capacities that will come online in the next couple of weeks, and then throughout next year. So if we talk about the total revenues from energy generation, we believe that we should be able to continue with the trend that has been established this year, and that's upwards. But of course, there's a lot of moving parts, so it's very hard to predict at this point in time. Whether we are delivering power plants faster or slower than others, I don't know. I think in that respect, we are focused on ourselves. We don't care too much what others do. And yeah, the focus is really on getting those projects ready to build, shorten the time then from technical ready to build to commissioning by front loading some of the procurement and making sure we are ready to build and commission the power plants as fast as we can. That's, and we don't look very much left and right what others do and whether do more or less. We wish everybody good luck in their efforts. What is important to us that we have the right assets, and I think I explained before what that means, that they are overbuilding and trackers wherever possible. The strengths and the weaknesses, opportunities and threats. So, well, I think one of the, now leaving aside the external environment in terms of market price development. So clearly the external threats are the market price development, although even when we look at the forward prices, even when we look at this cap, that's nothing that is fundamentally threatening. I would still see interest rates as a potential threat, although now they have eased off a bit, but things can get worse again. So clearly, as we require outside project financing in our rollout, that can have an impact. I think that at the geopolitical level, an escalation of the situation between China and Taiwan would be a rather bad scenario, but I believe not affecting the supply chain, but not only for us, but that would really have impacts well beyond the solar industry. And yeah, of course, the unpredictable governments. So now that the various governments try to tackle the situation, and their response to these high energy prices, we see different levels of sophistication and reasonableness. But then again, we've been in this industry now for 14 years. We've lived through life-threatening retroactive measures taken by the Czech government back in 2010, which essentially almost killed us. We still survived. So today, as we are hedged, we are operating in multiple markets, partially also outside Europe. We believe that we are in a good position to weather that storm. But at this point in time, I would still look at the situation positively, in the sense when we did our forecast in 2021 before our equity placement back then, we made our forecasts based on energy prices of 60 euros. Now we have a situation where elected and unelected bureaucrats are capping us at 180. Yeah, so it's still in a relative situation. When you look at it holistically, it is, I don't want to call it a luxury problem, but it's definitely not the level where we would have to feel tremendously threatened. I think in terms of strengths, I think that the fact that we're a public company, we're very transparent. We can see that it's very helpful in securing financing, that we are a very, very transparent partner. I think the fact that the EBRD came on board as an investor in our bond is testament to that. But and I think we can also, now having a few banks lined up willing to finance our merchant projects, which is a very new concept in Europe, and particularly in the CE region, I think shows that we are accepted as somebody who can properly synthesize the market trends and the technical solutions, and as a result, and I think it's also just a little bit about us versus others. We don't believe that the number of megawatts and how quickly you grow and how many you add is necessarily the key parameter. I would strongly prefer 1 megawatt of our overbuilt tracker power plants over 3 south-facing megawatts in the same market, because it's a much more valuable. So it's also about the net present value that you can actually create per megawatt, and so it's not only about the number of megawatts, but how well they're built and how competitive that asset is, and so this is why we really don't care what other people do in terms of number of megawatts in particular. So
maybe also to mention generally the integrated approach we are having, that we are covering the full life cycle of power plants, from the development to the construction to the investment and the long-term O&M, and the procurement of technology, which has also in the past given us a lot of flexibility, plus that we clearly have under control what we own long term. I think also 2 opportunities. I think things you mentioned in between a little. For sure, one of the biggest opportunities beside the growth of our solar business is with the technology from Regen, which I think is unique in the company, and very clearly the water business remediation going forward is one of the biggest opportunities we see long term in the company.
So could you shed more light on the trend of trade receivables?
Yeah, maybe to this. I mean, the trade receivables have increased clearly once in line with the growth of our revenue. So if you see this always relatively in the revenue view, how it is growing. Plus, there is clearly the effect that with the seasonality of our business in Q2, Q3, electricity generation is contributing much more. Therefore, at the end of the quarter, the outstanding amount is naturally much higher than in Q4 and Q1. What you will see, so this will automatically go down, as we have said or presented in the last time. With the green bonus scheme, there is an additional effect to that, there is part of this green bonus paid out only quarterly. So end of the reporting period, we have the full quarter for the full quarter, and not only for the months, the amounts outstanding. Nevertheless, as of today, these amounts have been collected. With the growing merchant revenues in Hungary, there is also, as of the end of the period, more outstanding. So this goes along with the revenue growth, and the technology trading as well has increased significantly. So with this also the receivables went up. This is in line with the growth of revenues and will continue like that with the number of revenue. The next one was
Currency risk.
Currency risk, yes. Well, there we have on the one side a certain natural hedge in our currency risk, that basically we have financed originally our power plants always in the currency in which the revenue stream was. So in Hungary, in Hungarian forint, in Czech Republic, originally in Czech crowns. Being merchant, there is a next layer coming to this, because the electricity, even if it is sold in local currency, the underlying price is a euro-based price for electricity, because it's within Europe, traded in euros. So even if you get it paid out, it is linked to euros. We have changed now our financing, that we have a combination of euro and local currency financing in both in the Czech Republic and in Hungary. On those, we have secured or we have the interest rate completely hedged. For the currencies, we have no extra hedging. Respectively, we have a hedge on the Czech crown financing on top as well, but more as a not how to say this, with a relatively broad bandwidth. So just as a security net in case of a disruptive FX activity happening. We feel comfortable with that level of hedging. There is for sure a certain exposure which we see as a risk that we are willing to cover by the equity part of the portfolio. But as said, as we see the only short-term exposure, we don't see this risk as too big at the moment. Going forward.
Well, I think the one last point I would like to make is that now on our new power plants, the financing will be in euros, as electricity in Europe is traded in euros, and therefore the banks consider it, even if we receive crowns or forints or lei physically at the end of the month, or 3 weeks after the end of the month, they're linked to a euro price.
So it's only short-term exposure.
So it's a short-term exposure that repeats every month. On that basis, they're willing to finance in euros, and which of course at the moment comes at a lower cost than financing in the respective local currencies. The next question is, what effective realized electricity prices we assume for 2023 outside Australia, 180 euros or less? So, well, I think it's very hard to say. As I pointed out before, with what we know today for our assets that we have in the case of Hungary, and what we'll be adding in Romania and Hungary, that there's no regulation in place at the moment that would cap us at 180. So if that's not the case, and prices remain higher, if we look at the forward prices, that's indicated. then we may end up at above 180. If 180 were a hard cap, then I would say that I don't believe we'll get in every hour. And again, there's also the question how it's measured, whether it's for every hour, every day, or every month. 180 is a cap. So if it were for every hour, then definitely we will not achieve 180. If it's per month, we may come relatively more closely. If on some parts of our portfolio the cap does not apply or only partially, like to 65% as we have in Hungary, then we may end up above 180. But I think that the important thing is the key driver next year will be our increased capacity, and that's something we have under control and make sure it happens. The next question is
trading business next
trading
year.
business.
So this Q4.
Q3 was very strong. Well, I think what I would say is that Q4 this year in our trading business will be much stronger than it was last year, when it was also the strongest quarter in the year. Whether that will be repeated this year, I think is something we cannot say at this point. But it's definitely not only in Q4 now, but also into next year, we see significantly higher business levels than we have had in the past. And I mean, the boom continues. I mean, a strong driver have been batteries, where maybe now over winter the sales will drop off a little bit, but it's definitely at much higher levels than what we used to have. Next question is any evaluations. That's probably in relation to newly connected power plants. So it will depend on what we'll be able to commission in Romania before the end of the year, what slips into Q1. So that would be the main driver.
Exactly. So what we commissioned this year still, we hope that there will be at least one project connected that would be then reevaluated end of Q4. For sure, we also reevaluate or reassess our existing portfolio based on the parameters. Nevertheless, we don't expect there any effects as of today.
Okay. Then the next question: how many capacities should be commissioned in 2023? So here I would say that well, we cannot be specific. There are 30 megawatts under construction already, or one of those power plants nearly. Some of it will connect it this year, some next. But when we think about really a new batch next year, I think I pointed out before that there's in stage 3 quite a few megawatts in Romania and also Hungary. So that is the baseline. Whether given the current situation we execute any projects in Poland remains to be seen. But there may also be capacities added in other markets, which we cannot foresee at this point. But next year has to be a significant step towards our year-end 2024 goal of 600.
Cool. I think then that's the end of the questions, right?
Yes. Thank you very much.
Presentation will be available online for you as well.
And if there are any further questions, we of course are available.
At ir@photonenergy.com.
Please direct your questions to that email, and we're happy to get back.
Thank you very much.
I wish you a great day.
Goodbye.
Thank you.